What's up, traders? Zach here from the Trading Network. I hope you guys are having a good Sunday, and I hope that you are ready for another great week in the markets ahead. I have yet another weekly market profile forecast for you guys for both the ES and NQ futures markets. We're going to take a look at some session profile, some weekly profile, some weekly candlestick charts. I want to show you guys a bit of a measured move that I am looking at, that I have been looking at for a while, just to have a little bit of fun and do something a little different than what we normally do. So without any further ado, let's dive in. But before we do, I want to ask you guys, if you find value in this content, please like, subscribe, and click that bell notification to be notified every single time we post videos here on the channel. I greatly appreciate it, and it truly makes a difference. So with that said, I'm going to turn the camera over here a little bit, and let's dive into let's do ES first, since that's what we got pulled up here. So ES, as I'm sure most of you guys are well aware, has been hanging out in a pretty long range for quite a bit. So same thing with NQ. You know, we're in inconclusive territory. I think it's safe to say that. We are in an area on the macro that is clearly a shift in behavior from what we have experienced, or what we had experienced basically all of 2022, which was an extended macro downtrend, right? We have then put in lows, and we started to make higher highs and higher lows on the weekly chart. And now we're kind of at a point where I'm really just looking to see which side of the range we break out of, right? You can see that we have this overnight low from April 12th at 41.10 and you can see that we have this overnight high from April 17th at 41.98 So I, at the moment, am basically just waiting to see if price can move above 4,200 or move below basically 4,100, and that is likely when we are going to have our next larger macro move. So until then, basically just playing the session profiles, keeping an eye on the higher time frame, the weekly levels as well, but not, you know, getting too strongly biased, obviously, to one side or the other, because the market is just chopping around. It's ranging, and we got to be patient. There's lots of opportunity when the market is in a, you know, more ranging or bracketing environment, but it really chops up a lot of people if you can't be patient. So with that said, what I'm going to be looking at moving into this week, moving into tomorrow, first and foremost, is, can you guys guess, the reaction to Friday's range. So reaction to Friday's range is going to be whether we can move above 41.61 or whether we move below 41.35. Pretty small range. I mean, only 25 points. So what I'm going to see is if we can move and hold above 41.61, very likely we get a pretty quick move into this naked POC from the 19th. That is Wednesday's regular trading hours session at 41.74. So if we move and hold above 41.61, look for a move to 41.74 first and foremost. Move and hold above that, I'd look for a move up to 81.50, which is the value high from the 19th, and 87.50, which is the range high from the 19th as well. And then subsequently, I would be looking for a move into 41.94.75, and then a retest of 4,200-ish if we can get back above even 41.87. Acceptance above that level, in my opinion, increases the probability significantly that we do at least give 4,200 a test. And on the downside, if we cannot get above or get acceptance above 41.61, then I will be looking for a move back to Friday's POC. Obviously, we got to work on the value high from Friday at 41.55 but that is just 5 points above the POC. So really, this value area, or the reaction to Friday's value, which is between 41.45 and 41.55 that's going to be pretty telling. So if you want to keep it simple, just watch the reaction to this 10-point range. Below it likely means that we are moving and testing these downside levels: 41.40, 41.37.75, 41.35 and lower, which we will look at on the weekly profile especially, but you can also see we've got 41.24. That is the low from the 13th regular trading hour session. 22 is the overnight POC from the 12th into 13th. And then 41.10 is that lower range level that I will be looking at this week. That's going to be a very important inflection point this week, as will 4,200 on ES. So that is pretty simple. Let's pop on over to the weekly. I'll show you guys what I'm looking at. It is going to be pretty short and sweet, honestly, because the highs from the last 2 weeks are going to be important levels. If we can move and hold above those levels, we're very likely moving up to visit levels that we haven't seen in quite some time. To be precise, that would be we haven't seen since August of 2022. Now, if we move below that 41.35 level, that is what I'm going to be looking at. Just to be clear here, our entire regular trading hours range for the week last week was 60 points. Okay, so keep that in mind, please. And even, if you want to throw in the ETH levels, our low for last week was 41.10, only 20 points below that, 25 points below that, right? So we had a really tight range last week, and it's going to be very important to be patient and see what kind of reaction we can get above or below last week's range. So break below last week's low at 41.35 and a quarter likely gets us a move to 41.13. That is the value area low from the week of April 10th. And a break below that very likely gets us a test of 40.9875, which is the low from that same week, also coinciding with 40.96, which is the low from the prior week of April 3rd, and the value area low from that level or that week as well. So if we break 41.35 to the downside, this 40.98, basically 4100 level, is going to be very, very important, right? So not only, just to be clear, is 4110 an important level from April 12th, the overnight low, it is also the weekly low from April 10th, the week of April 10th, and the weekly low from the week of April 3rd as well. So that is a very, very important area. Yes, this is at 40.96, this is at 40.98, and that overnight low is at 41.10, but they're pretty darn close to each other, and that could be considered a major, major zone, and macro behavior could change at least temporarily with rejection below 41.10. So I think it's important to just spend a little bit more time talking about that. So with that said, NQ, as we move over to the NQ session profile, is going to be pretty similar from a reaction standpoint in regards to what we're looking at. Move above Friday's high very likely gets us a move to 13.2K. Move above 13.2K very likely gets us a move to Wednesday's high at 13.226. And then 13.226, acceptance above that level likely gets us to our upside inflection point on NQ, in my opinion, which is 13.3K. So if I back up a little bit, zoom out, and we do the same thing that we did on ES, really the range that we're in is 12,925 up to 13.3, right? 13,300 on NQ. So major, major inflection points moving forward this week. 12,925, 13.3K. Anywhere in between here, we're still operating in range. Don't overthink it. Just look for great setups at major levels. That's it. Very, very simple. You guys can truly keep it that simple, and you should keep it that simple. Most traders lose because they overcomplicate and overthink. Let's keep it real. So if you guys just keep it simple, wait for reaction at these levels, watch for your other technical factors like your momentum oscillators, your moving averages, your volatility oscillators, your fib pivots, VWAP deviations, things of that nature, candlestick structure, of course. Those factors or checkboxes in combination with these market profile levels, as I say every single week, will give you the high probability setups that you're after. You just have to be patient enough and precise enough with your entries to capitalize. This 13,122 level is going to be very, very important. Obviously, we're right around 1370 right now, right around the POC from Friday. So we got to wait, see how price develops. Watch for reaction to Friday's high. Watch for reaction to the value area from Friday. Again, we have a small value area from Friday, even on NQ. It is only 60 points. So once again, if you guys are NQ traders and you want to keep it simple trading NQ, just watch reaction to Friday's value, and below Friday's value area low likely gets you, 30-point move down to the overnight low from the 20th into the 21st. And then, if that breaks, maybe another 20-point move down to Friday's low. Again, real trade examples or real trade ideas that you can consider and trade on playback. You can let tomorrow play out and then go play, on playback, right? These are very, very important and very helpful techniques and drills that you guys can do to understand, hey, what is Zach even talking about in the market profile plans or in the market profile analysis videos that he does at the beginning of every week or in our trade plans, like I was mentioning. We release trade plans every single day, Monday through Friday, 10 a.m. Eastern time for the public, 9 a.m. Eastern time for folks in our private Discord. And you guys can go, you can backtest our trade plans. You can backtest our target levels. We have target levels upside and downside every single day. And your mind will be blown at how often our targets get hit in our trade plans. Yes, that we release for free every single day. So if you guys are watching these videos and you're not taking advantage of our market profile trade plans, what are you doing? What are you doing? Go join the Facebook group. It's free. It's in the link below, or in the description below, rather. Join our Facebook group or join our Discord, of course, and you will get access to our market profile trade plans 30 minutes before market open as well, to give you a bit of an extra edge. So without me going on too crazy of a tangent, really just keep an eye on Friday's high, Friday's low, Friday's value area, right? That'll get you trade ideas. I mean, moving forward into tomorrow, keep it very simply. So 122, 149, 13.2K, 13,226, 13.3K to the upside. Watch those levels. And these will all be in our trade plan tomorrow, most likely, unless we open, like gap up or gap down. So on the downside, watch 1395. Watch Friday's POC, 1372. Watch Friday's value low at 13,035. Watch Friday's low, 12,982, right? And use these levels as dominoes. If X breaks, look for a move to Y, or you can even look for a move to 13,084, which is the overnight POC from Thursday into Friday, right? So just to be very clear, level dominoes. 95 breaks, very likely going to 83. 83 breaks, very likely going to 72. 72 breaks, very likely going to 59, and then 44, and then 35, and then 25, and 21, and 05, and 982. This might seem complicated, but it is actually very simple. Quite literally, just mark off these levels and watch for a reaction if you guys are new to the profile especially, and enjoy, and you will be amazed. So with that said, let's dig into the NQ weekly profile. It's going to be very, very similar to what we were looking at on ES. Again, I mean, here's the range, my friends. We're just hanging out within this range. You can see that there's actually two very close composite areas that I would be paying attention to. This area right here, which, what do you know, coincides with last week's value low at 13,070-ish. And this area right here, 13,184, which is right above the POC from last week, right below the value area high from last week. So you can consider that nothing has changed on the macro or in the macro environment until or unless we break above 13,330 even, or, 12,982 is last week's low. So we'll start there. But I just want to make it very clear that even though I do these weekly market profile forecasts, that the real bread and butter for an intraday trader is understanding the relationship to the prior day's range. So Monday, every day, we look at Friday's range. On Tuesday, we look at Monday's range. On Wednesday, we look at Tuesday's range, right? So on and so forth. And based on where we open, just in relation to the prior day's range, that gives you probability for the market environment. You will know whether we are more likely to be trending or ranging. If you can use market profile on a daily basis, or just use our trade plans, we make it very easy for you guys to create a trade plan, a new trade plan based on each new day's market profile information. So I want to make that very clear, and I'll give you guys a quick example. So let's say that tomorrow we open up here. We open up at 41.67, right? That means that we are opening gap up. That means that we are opening above the prior regular trading hours high. Prior range high was 41.61. If we open up at 41.67, that means that we are opening with a 6-point gap, okay? When we open with a gap, whether it's gap up or gap down, that means immediately, the second the market opens, no later, the second the market opens, I know that because we are gap up or gap down, we are more likely to have trending price action. I also know that the two most likely scenarios are a gap and go, which is when we open and we move and we trend in the direction of the gap. So if we open, gap up, a gap and go is we open and we trend to the upside almost immediately. Now, I know that the other high probability scenario is that we open and we close the gap. We move back down to tap the prior range high. That is a gap close. So for all of you guys that are scrolling Instagram, watching YouTube videos, hearing people talk about gaps, there are different kinds of gaps, but in my opinion, the one gap to rule them is the market profile gap. When we are truly opening above the high of the prior session, the prior regular trading hour session, or opening below the low of the prior regular trading hour session. Now, there are obviously other strategies and other information that we can derive when we open within range and value, within range but below value, within range but above value, etc. And I actually have a video called the Conviction Meter that discusses all of the implications correlating to our opening position. So I will not get into that information much more in this video, but I strongly suggest you guys check out the Conviction Meter video. I'll try to put it in the description of this video as well so you guys can check it out. But if you're interested in the profile, if you're really wanting to dig in and fully grasp auction theory and how this tool and this information has literally worked on a daily basis for traders since way before I was even alive, check out that video and stay tuned for my market profile course coming very, very soon. So with that said, let's stop the rambling, at least for a moment. And let me pop on over to the weekly candlestick chart, and we will check out some weekly NQ and ES. All right, let's get to it. So what I want to say here, first and foremost, is I've been saying the same thing about the weekly chart for quite some time, is that we've obviously changed behavior. Pretty much strong downtrend entire 2022. Came in, put in some bullish divergence, higher lows on the weekly chart, right? So safe to say that we have, at the very least, changed behavior from a clear downtrend where we're making lower highs and lower lows, right, to higher highs and higher lows. Okay, I know that was messy, but what I want to say here is that this structure is a structure that I trade on the 377 tick chart, and I've said that before, and I might have even mentioned that this is a pretty clean bull flag. And I might have even made some outlandish claim about a measured move that's 8,800 points on NQ. That could take 600 days to play out. But I just want to plant the seed. And I want to just have this on record because I am not in the business of making predictions. But I will say this is a repeatable pattern that I've traded more times than I could count on a 377 tick chart. I have not had the opportunity to see this pattern on a weekly chart more times than I could count. I have not been trading for that long. So I will say, once again, as I've been saying, this could be a weekly bull flag. This weekly bull flag could take multiple years to play out. But until or unless we break back below like 10,800, this bull flag is intact. I would say that it becomes lower and lower probability if we start to break back below this low at like 12,000 and, you know, put in some like lower highs and lower lows, right? That would be a little bit spooky, I suppose, for the bull flag playing out. But again, this is a flag that was established over 610 days, okay? So that means that it is not far-fetched to think it would take another couple of years to play out, right? And it should. I mean, if that happened any quicker, it would be alarming, honestly. So we have the same thing on ES. I have it marked up already. On ES, the bull flag, and I just want to be clear here in regards to how orderly this is. I mean, 1 touch, 2 touch, 3 touch, 4 touch, break, retest, almost a tick, and then continue, right? So that's textbook structure, I must say. And I'm sure a lot of people are looking at it, which means there's a lot of liquidity up here. If we break these swing highs, there's a lot of people short from the last, I don't know, year that are probably going to get their stops run. And there are probably a lot of people long in this area with their stops below here. And that's why I am thinking that the market is so indecisive right now. It's because we're basically just trying to figure out, well, are we going to break to the upside? Are we going to run all this liquidity and probably, in my opinion, get, a larger 300 plus point move on ES? Maybe. Or do we break back down, not escape the range yet, and revisit 3,800-ish? Who knows? Remains to be seen. But I just wanted to point this out. I wanted to plant the seed. If you guys have not already had it planted, I'm not trying to get you bull bias and, not financial advice, of course, should be obvious. But this is something that I'm excited about, honestly, because even if this is a trap, even if this doesn't work, I have not been able to take advantage of a 3-step shift on a weekly chart on the S&P 500 or the NASDAQ in my entire life. I've never seen this before, so I'm going to try to capitalize on it. If I see my setup, regardless of whether it's on a weekly, a daily, a 3-day, a 4-hour, a 377 tick chart, a 5,000 tick chart, it doesn't matter. If I see my setup, I capitalize on it. And I think that this is worth talking about. I think that this pattern is worth talking about. I think this pattern is worth analyzing and practicing and getting familiar with. Get familiar with the 3-step shift. If you guys are not aware, this is my reversal strategy that I teach in the Fundamentals of Futures Trading course. I teach a trending strategy, the opportunity zone. I teach a ranging strategy, the momentum flip, and I teach a reversal strategy, the 3-step shift. And this is the 3-step shift. Step 1, directional market. Step 2, divergence. Step 3, higher low followed by the div or a lower high after the div. And you can see the 3-step shift is right here too. So we have, this is actually pretty cool. You guys get some free game right here. So boom, we've got bear div and we got a lower high. See you later for the next year. We've got bull div. It's also on the slow Stokes here too. And higher lows. See you later for the next year or two. We'll see. We shall see. So I'm going to end my rambling here. I'm going to thank you guys for putting up with me and putting up with this longer, extended, more rant-fueled weekly market profile forecast. I hope it is valuable. I hope that you guys find the extra conversation, the extra information valuable as well. If you do find it valuable, I would greatly appreciate it if you would like, subscribe, and click that bell notification to be notified every single time we post videos here on the channel. If you guys want to learn more about what we do at the Trading Network on a daily basis, check out our website, thetradingnetwork.io, where you can purchase access to our most popular offering, the Proprietary bundle, which includes lifetime access to our private Discord community, where myself and the TTN Pro team live stream our trading every single day at 9:30 a.m. Eastern Time. It also includes access to our Fundamentals of Futures Trading course, where I teach the opportunity zone strategy, the momentum flip strategy, and the 3-step shift strategy in immense detail. And last but not least, it includes access to our proprietary indicator package. If you guys are looking for a more tailored or catered experience with one-on-one mentorship, that is also something I offer. You can find more information about one-on-one mentorship on our website as well. And you can also purchase all of the products that I have mentioned standalone on our website, including the Fundamentals of Futures Trading course, indicator package, and Discord access. You can buy a monthly pass to our Discord, or you can purchase standalone lifetime access to our Discord for $9.97. But I gotta say, Pro Trader Bundle, best bang for your buck by far, because you get lifetime access to the Discord, our course content, and the indicator package. So with all of that said, the waitlist for Quant Suite is also live. So if you guys are interested in taking advantage of our algorithmic trading suite, make sure that you are members of the Trading Network private Discord, as it will be exclusive to members of the TTN community. And if you want to join the waitlist, you can do so at quantsuite.ai. Thank you guys one more time. I appreciate you very much. If you have any questions about anything I have mentioned, feel free to drop them down in the comments below, or shoot us an email at info@thetradingnetwork.io, and we will get back to you and help any way we possibly can. Much love. I appreciate you, and I will see you in the next video. Cheers.